Hey traders, Dennis Wilborn. What a week in the market. I hope you survived it. Inflation has basically jumped up to 1981 levels, and the market is reacting and telling us what it thinks about it. It's going down. So how are you handling this? We've got some ideas in this week's video of trade your way to wealth, and for both trading ETFs and potentially stocks. But let's take a look at today's video right now. Good afternoon, everybody. This is Dennis Wilborn, active trend trader. Welcome to Trade Your Way to Wealth and Financial Freedom. We're going to be talking about actually, I don't know if we're going to be talking about stock picks today or not. I've got Neil's joined us when we're still hunting for Steve. With the market condition the way it is today, Steve may have stayed in bed. Neil, what do you think?
Yeah, it's a good day to stay in bed.
It is, and so good time to take a nap. But anyway, we want to welcome everybody. We want to welcome everybody who's joined us over also on the YouTube channel. If you're on the YouTube channel, I am monitoring, so just let me know who's out there. And if you have any questions over there, just type them into the chat box, and we will continue from there. Also, right now, a very interesting time. I think between now and next Wednesday, and I shared with this with Neil earlier, is that between now and next Wednesday, when the Fed meets and reports out, it in fact may not be I'm going to be basically kind of flat the market until that happens. My system took me out of basically all of my holdings except for one, and it jumped us in on that just first thing this morning on into one of our leverage ETFs that we trade with the AutoPilot Trading system. Everything else, basically our trailing stops were hit, and so some of them were profitable. Fortunately, our downside was, basically less than 2% on average losses, and our upside we were in there, 8.5% to 10% on the gains, and so that all works out very well. So the question we have is basically, what are you going to do right now? How do you trade what's going on right now? Right now, that's part of the question that we'll be asking going into today's session. Stephen or Neil, what are you doing right now? I know that you're probably not in a hurry to jump into anything, but how are you approaching the markets right now?
I am just waiting. I think we're at a very critical level testing a prior low. I don't know if it'll hold, but we'll see what the volume is like, what the price action is like at these levels, which for me, depending on how it resolves, would dictate what I do. I suspect it's a test and will bounce. We'll eventually resume an uptrend, but that may not happen, and we could break this level and trade quite a bit lower. And until we resolve it, I don't know what to do. I don't see a direction in the market other than get ready to trade.
Yeah, so get ready to trade. So that I agree. Neil, what about yourself?
No, I got stopped out on most of my position except one, which is CSL, and that might even get stopped out.
Okay. And so
I'm just
I did dip my feet back into the water over the last week, but I basically got stopped back out. I got stopped out of my positions.
And so now when you got stopped out, guys, were you like pissed off because you got stopped out? Or, that, don't you just hate it when you take a loss? Come on, man. We should be angry and emotional, right?
I wasn't happy about it, but I'm glad I'm not hanging on. The losses would be larger.
Yeah, I got it. One of the things is I was stopped out on a couple of where I hit the trailing stops, and so the trade was profitable. Now, I didn't get out for the max profit, but at the same time, I'll show you what it looked like, and I'm so glad that I basically followed my rules and got the heck out. Here's where we're sitting as of about 9 o'clock this morning. I'm following my 40% line, so I'm pleased with that. Here's where we sat last week at this time. Here's where we're sitting today. I'm still up 21%, and thanks to the S&P falling from the sky, as I said in the video I put on YouTube yesterday on the market review, as the the indexes, I said basically the price action was falling from the sky like a turd from a tall cow, and which is absolutely correct. And the thing about it is you want to be careful because you don't want to get caught in the splat. And if you're, I'm a country boy, I was raised in the country, and that's exactly, if you've ever been around cow pies, that's not a place you want to basically be. But here's where we're sitting. So let's go ahead and jump over to the indexes, and we'll see what the heck they look like. Got a couple of good, and we'll start over with the spiders. Spiders, I mentioned this yesterday. There was a huge, and basically just take it right here. And if you are a active trend trading or AutoPilot Trading members, we talked about the TSI providing some additional strong presentation and tutorial on this on Wednesday night on our monthly premium training session. And we all talked about the TSI, where when it breaks a trend line, that is oftentimes indicative that, guess what? We are the trend has changed, or the momentum has shifted. And we had two of them here. We had one earlier in the week. Isn't that interesting? That was on when we had that bearish harami right there. We had just the day after, we had a trend line break. And so those who were fast, they could have got in on a trade down to the downside on that one. We were actually in a position to trade to the upside on the leverage ETF UPRO, and it failed here at the level of support, about the 406 level. Fell like a rock yesterday. This is what I'm talking about. That was that was not a hesitant sell-off. That was the buyers did not step in at support. The sellers took over and rammed it home. What happens today? And this is something to keep in mind going into next week. What happened was we have a gap down. Now, that gap in itself, that represents a strong level of, in this case, resistance. The middle section of that gap is basically the strongest part of the resistance. And so you can look for a pullback up into, could go all the way up to the middle of that gap, but then I'm going to be looking for a trade to go to the downside from there. That's what we'll be looking for on the S&P. On the weekly chart, this is a very bearish signal. We have a evening star, basically after last week's bearish harami. Then we get a sell-off to the downside. Now, the question is will Investor Business Daily put the market back in correction, because they did move it into uptrend under pressure? I think it has to take out that right there, that low, because that is a swing low, the most recent one that the most recent rally was based off of. Takes out that swing low, then I think they will mark it into back-end market in correction. That's what I anticipate. They may make a call on it earlier and say, hey, we're going to go ahead and do it now. We'll see. We'll see what transpires. And so that's what we've got for the S&P. The Qs, the NASDAQ looking even uglier, because one, NASDAQ was not as strong going in. Similar rules apply. TSI has broken down. As we covered on Wednesday night, it is breaking below the zero line. When it breaks below the zero line, that is oftentimes indicative that we're going to fall further, and it changes the bias on the price action to downside. Now, am I gonna do any kind of a downside trade from where it's at right now? No, I'll wait for a little bit of a pullback. Again, that gap down still works the same way. I like it probably at about 296 to 297 if it gets up that far. It may not get any further than today's high. So just we'll keep our eye on that. The other one, the Russell. The Russell, basically, same. Russell had been acting much stronger than the other indexes. However, look at that. It got right up into the downtrend line on Tuesday of this week. The next day, bearish Harami, then drops down, loses the support yesterday, just like the other indexes, gapped down. Again, it is basically crossed over. And so I'm counting this as a very significant reversal in momentum to the downside. And for the time being, I'll be looking for trades on the indexes that are going to go to the downside. And so, yeah, say, hey, kid, we'll be checking that out here shortly. And so, Stephen and Neil, what's your thoughts on the?
Pretty much what you described. I think the market's really in sort of a no man's land. We don't, I think we're testing the prior lows, but until we're finished doing that process, I don't know if it'll hold or it'll break lower. So
Okay.
I'm out of the market until I can see what happens.
Yeah, so you're out of the market until it can prove itself, yeah?
Yeah.
Okay, I agree. Neil?
No, I'm the same way. I'm now waiting for my triple screen signal to turn around. If they do, we'll see.
Now, you mentioned something earlier on, Neil, that about your triple screen. You said that your triple screen, that the monthly triple screen hasn't fired short yet.
That is correct. And it usually is a laggard, but if it does fire that signal,
So if you get your downside trigger on your triple screen, that oftentimes spells really trouble for the market.
that's right. I mean, that means the trouble is already there and going to get worse.
Okay. And so that's where I always roll over here and just take a look at the monthlies. I recognize we're only halfway through the month right now, but it's looking like the trajectory is not changing. We're still going down. The monthly, as you can see, earlier in the year, we crossed over in when was that? That was in actually July of 2021. The market, the TSI crossed over on the monthly and has been falling. We dropped the 42 closer to 42 here around January. And guess what, guys? January, February, March, April, May, June. Looks like June wants to continue with the downside slide, as I'll put it. So excellent. Now, as I was saying earlier, the thing about it is just we have to learn how to take our and earlier today, here's one. ATKR. We had been in a trade on ATKR, had taken some really great profits off the table on this. Earlier on, we had jumped into it down here in this level here, about the 104, 105 level. We rode it up and took some nice profits up here. As we did that, we automatically transitioned into a trailing stop scenario where the trailing stop was sitting at $114 approximately, which was triggered yesterday. Now, this is where I'm thankful for trailing stops, because look what happens from there. As you see, we got out there, but look, and you never know when this is going to happen, but then pow, look how far it fell from there. It fell another, it looks like about $11, but we were clear of it up here and not ready to jump back into it. But this is a bad sell-off right there, bad sell-off. So let's go back over. And guys, you got any stocks whatsoever you want to take a look at?
The only one, if you put a gun on my head and said, buy a stock today.
Okay.
I'll buy SQM.
SQM.
This has great fundamentals and
yeah, I mean that's pulling back for a breakout. I kind of like that. It's selling off, but the sell off. Look at the volume, it de-escalating. So Yeah, I like that, SQM. Yeah, Sam, the ATKR, once we hit on that particular trade, once we hit our initial profit targets, we automatically automatically go in and put in a trailing stop of 7.5%. And so, yeah, not a problem. And you're an autopilot trader, right? I don't know if you jumped into the autopilot trading or not. So SQM, okay, yeah, that's covered in the tutorial videos. Hope you had a chance to take a look at those. So, Steve, what about you?
No real trade. Nothing I'm really happy about.
I like it. And so, as we know, inflation is the big challenge that people are having out there right now. I mean, I don't know about you, but I was doing the math, and gasoline, gas is up about 104% since December of 2020, about 104% over, I think that's about 17 months. If it continues on by the end and continues to inflate at its current rate, because gasoline went on average from, I think it was $2.25 in December 2020. It's now on average up to, I think it was like $4.50. I know it's gone up higher than that. And I did the math on it, did the calculations. It could be by the end of 2024, gas at about $11 to $12 a gallon, $11 to $12 per gallon. Now that's significant, but I know that kind of inflation is hitting everybody. But other things that are going up are things like food and all that kind of stuff. And so the question I have for you really quick is, your mission, if you choose to accept it, is what can you do to combat inflation? What can you do personally? What are you doing personally to combat it? Are you cutting your cost as much as you can? Are you looking for other sources of income? And that's where I say that the other sources of income piece is really great for I think trading stocks is a really great opportunity for doing that. One of the things that I'm looking at is, rather than trying to trade individual stocks, I want to shift over and look at the index ETFs and the sector ETFs that I follow on the AutoPilot Trading service. And some of those that I like is here's a couple that just off the top of your head, look at, if the market's going to keep going up, take a look at trading SQQQ. See that? It just works in reverse. What this is telling us that we've got strong support at 52. And so, or we can pull all the way back into the moving averages and then bounce from there. If that happened, where's our projected target? Well, this is one of the areas where grab that, go up to there. So that's about a 19% move. A lot of these leverage ETFs, you can count on if you time them properly, somewhere between 10 to 22, 25%, and then you pull the plug on it. This is an inverse. And so that's a way to, learn the patterns, learn how to interpret what's going on with TSI and market forecast, and then go from there. So that's one of them that you can take a look at. Some of the other ones that I currently like are SOXS, the opposite side of the semis. That's another place. And FAZ. Again, these are the leveraged inverse ETFs. And as you can see, they've launched off and are now back into a strong uptrend with the momentum going up. Now, do we buy them right there? Heavens no. What we do is we wait for some kind of a pullback. If this is the high, some kind of a pullback and a bounce from there. So we're trying to target what? We're trying to target there. And so that means just that means basically just be able to target right there. You're watching the charts to cover you on that in that case. Okay, Ron, are those stocks you want us to take a look at? We don't normally take a look at that many stocks during this session. That's not the intention of it. of that string, which one would you want us to take a hard look at? And then, Sam, if you're an autopilot trader, you know you have the invite to the 12 o'clock noon final hour. And that's a great place to be plugged into. You really need to plug into that one. You should have received an alert on that. Not an alert, you should have received a invitation to that. But to answer your question really quick, no, it's not connected to where it can trade through the oh gosh darn it, through the brokers. And so, hey, what are you going to do during a bear market? You know, we are, you know, basically the S&P, not the S&P, but the NASDAQ and the Russell is back into and continues to be in a bear market. And so what are some of the things you can do? And one of the things is, one, stay in cash. Stay in cash. The active trend trading moved us into cash back in February. It's moved us back into cash again. So it's a great time to be building up your cash basis on to basically be ready to go, like Steve's waiting for the trades to set up. Stay engaged, disciplined, consistent approach, study past bear market reversals. Take a look over on the Market Tech Talk YouTube channel. I have several tutorials on what market bottoms look like, going back and taking a look from in past bear markets. Be ready with a watch list of stocks and or ETFs that have held up better than the markets. Not all follow-throughs lead to bulls, as we have seen 6 times this year. Sometimes it's a bull trap. Wade back in after reversal days with follow-through according to your rules. In other words, oftentimes people think they got to go in full position. Boom. No, I suggest go in, you know, even 25% of a full position. And so then learn alternatives. There is a couple of alternatives out there that I'm going to be covering with our premium members in the very near futures. The Micro E-mini futures is an interesting vehicle to be able to generate some cash flow if that's what you're interested in, and then the inverse ETF. So the big question is what do you need to learn from this bear market? Let me go and cover 2 more. First, we're going to go here, and this is one of my favorite indicators. This is a percentage of stocks above the 20-day moving average on the NYSE. And as you can see, we started this week off with over 80% of the stocks on the NYSE were above the 20-day moving average. We're ending the week down here at the almost 30 level. When it gets into this lower level of 30 or below, that oftentimes means we're going to be reversing and moving higher. At the same time, it can stay down here a while, and so we may get a reversal that may lead to basically a tradable rally, but we want to be careful with it. The other thing I like to take a look at is what's going on with the VIX. Now, Hey said basically the VIX wasn't going anywhere. I disagree. The VIX came down. This is the volatility index for the S&P. And actually, we've had a reversal signal. This is telling me that, okay, we may be going back up towards these past highs. When does VIX really become of interest to me? Is when it is basically down here towards its lows and back up here around the 35 level or higher. That's when we tend to get the reversal back to the upside on the VIX. And so let's see, Ron, did you hone out which one of those stocks you want us to take a look at? And hey, so that's what we got going on with the VIX over on Hey Kid is over on the YouTube channel. Do I see the pullback in oil as a buying opportunity? That's a great question. What about you guys? Steve and Neil, do you see the buy as a buying opportunity on oil?
I've not looked at it very closely, but I think it might be.
Okay, and there's USO. That's the proxy for for oil. Right. And you see, yeah, it's pulling back. Hey, the one thing I'm going to be looking at though, we have negative divergence on the weekly momentum, and we have a rollover here. Now, where might it go? It may just go to the 87.98 level or these past lows over here.
I would just wait to see a reversal signal after a pullback of some sort. Looks like the pullback starting. but I need to see reversal action before I would get.
Yeah, I agree with that wholeheartedly. Like I said, the momentum is starting to shift up. Where might it pull back to? I mean, you can basically, I would look for a pullback. What's it respected in the past? Pull back to the
20. The
20-day or pull back to the 50-day. Those are two lines that it's respected in the past. See, I don't know a darn thing about these.
And I'm also not so sure about this analysis, but I think, or my thinking, if inflation does not cool off, I think oil will sort of move with inflation. Right?
Yeah.
Grinding to the upside.
The one thing that was very surprising this morning, and it finally kicked in, that I think is keep your eyeball on gold right now. This is a huge bullish engulfing pattern here on gold. And if gold does tend to take off it does tend to take off when inflation continues to heat up. And so that's a thought. And so, okay, that basically is going to cover us for today, folks. I just want to remind you, learn how to trade. Step 1, learn what to wait for. Step number 2, develop the discipline to actually wait. And so, hey, you may be looking for, where you can find these big 100% gainers or 15% gainers or 20%. You got to know where the big fish swim. And that's one of the things I isolate in. I wish that ETFs and leverage ETFs were available when I first started trading, but they weren't. Here's an example of some of the opportunities that TQQ has provided over the past 12 months. And as you can see, and these type of moves, even if you only pick up half the move, can really make a wonderful compounding process. So, not knowing when and where and how to enter a position, AutoPilot Trading takes care of that. We basically have some tutorials that will show you exactly what to do, and there's the link there. And if you're a veteran and are a Bay Area Moneymaker member, let me know, email me, and we offer a discount for veterans and also Bay Area Moneymakers or any member of an IBD meetup group. Just let me know which group you're a member of. So that's it for today, guys. Sorry we got a little bit long-winded, but we had a lot to cover. Stephen and Neil, any final thoughts?
Stay patient.
Stay patient. All right.
No, I think stay patient is the name of the game right now.
Okay, excellent. So with that, I'll bid everybody aloha and God bless. And again, I'm not going to touch this market until after Wednesday this coming week, and that's just waiting for the Fed.